On today's episode, we are going to take a look at Facebook. They just reported earnings and are down about 3%, so it might be giving us a buying opportunity. On today's episode, we're going to do an earnings recap. We're also going to take a look at their financial numbers, and then I'm going to give some of my final thoughts. For those that don't know, Facebook is also a tier 1 stock for me. I have 9 tier 1. A few of them have reported earnings, and this is going to be another one that I'm very excited to look at. Like always, if you're new to the channel, make sure to subscribe and don't forget to hit the thumbs up. It helps the channel out so much. Remember, none of this should be taken as advice as I am not a professional. And let me know in the comments below, what are you doing with Facebook right now? Are you buying? Are you selling? Are you holding? And while you're down there, don't forget to join the Discord channel. It's free to anybody that wants to join. I always post when I buy there, so feel free to check that out. And while you're down there, don't forget to click that Webull link. If you sign up and follow those rules, we both could get a free stock, sometimes even more than one. So right now, Facebook is sitting at $273.40, down about 2.7%. And right now, with the market cap of about $800 billion, with that 2% down, 2 to 3% down, it's probably about 790 instead. Year-to-date returns are about 33%, so those are really good numbers for a long-term investor, so congratulations. And it's about 9% down from its all-time high of the year, and that was somewhere in September when we saw that crazy pull up. So let's take a quick look at their earnings. So Facebook Q3 GAAP earnings per share were $2.70, which beat by 80 cents. Revenue was $21.47 billion. This is up about 21.6% compared to the same time last year, and it actually beat expectation by about $1.7 billion. Some other great numbers that we're seeing is daily active users, and that's about 1.82 billion users, and that's better than overall consensus. The overall estimation was about 1.79 billion. Monthly active users were 2.74 billion, and that's better than the 2.7 billion that was the overall consensus. And first, we're going to see right here that Facebook collects most of its revenue from advertisement. Over 95% of its revenue comes from advertisement. So it is important to keep a look at metrics of daily active users and monthly active users, because if they have more eyes watching their platform, that means more companies are going to advertise. That also means they're also showing more advertisements. So it overall increases the revenue for Facebook. And one thing I do want to mention, it always depends what type of company one person is looking at. Sometimes it's good to see constant growth, and it's better to look at quarter over quarter returns in the revenue. Other times it's better to look at year over year. Facebook, since it is an advertisement, you want to look at Facebook and Google. I don't think I mentioned this in my Google video, and you guys are interested on Google. I did a video just about an hour ago, so if you guys want to check it out, make sure to do that. Plenty of content here, so make sure to subscribe. But like I was saying, right, Facebook is an advertisement business, and advertisements go very heavy during different times. Q4, for example, tends to be the heaviest, and we can see the Q4 of 18, Q4 of 19 be the biggest compared to anything around it. And that's because that's the holiday season. So during holiday season, everybody wants to sell something. Everybody wants to just grab your attention to go to the store and buy something. So that's why there's huge advertisement numbers there. So that's why you like to see Q3. You like to look at year over year. So Q3 this year was $21.4 billion compared to $17.6 billion compared to the same time last year. There is something else that's going on this year that might be helping improve this Q3 earnings, because this is actually a pretty big jump. And that right now, I want to say, is probably the elections that are going on. Both election sides are spending a lot of money on advertisement in both Facebook and YouTube and all these other platforms. So I do believe that is also helping boost up some of this growth in these companies. And just something I wanted to mention. Next, I want to take a look at their Facebook daily active users. So we're going to look, they kind of separate their users into two platforms. First, Facebook daily active users, which is their daily active users for just the platform Facebook. Then they have family active users, and family active users are the ones that are in all their systems, from Facebook, WhatsApp, to Instagram. So there is a huge growth in both of them, which is pretty good. Facebook daily active users were $1.82 billion on average for September of 2020, and that was an increase of about 12% compared to the same time last year. There's actually a decrease in the United States and Canada platform. This quarter was 196 million, when last quarter we were 198 million. So there seems to be a slowdown there. And that's very important because United States and Canada are the biggest revenue generated, the most expensive revenue collected through advertisement. Companies are more willing to pay to for viewers to show their ads to here in the United States and Canada. So that's definitely something to keep a note of, and I do believe this might be one of the major reasons the stock price might be down right now. Another thing is Europe has been pretty flatline for the past 3 quarters. In quarter one, they had about 305 million daily active users. They had the same thing in quarter two, and quarter three is about the same, 305. Now, if we take a look at Facebook monthly active users, that also increased by 12%. Family daily active users, which I mentioned is WhatsApp, Instagram, and Facebook, and Messenger, that has increased 15% compared to the same time last year. And family monthly active people have increased by 14% compared to the same time last year. So we're still seeing huge amount of growth in active users, which is definitely a great thing for an advertisement business. The only one I did want to definitely mention is that United States and Canada is down and Europe is still pretty much flatline. Another thing I just want to show you is the average revenue per person right now. Again, this is something you want to look at per quarter. So quarter three right now is about $6.76 per user compared to $6.33 about a year ago. So we're still seeing growth there as well. Now we want to take a look at their diluted earnings per share. This quarter was $2.71 on diluted earnings per share compared to $2.12 a year ago. That is actually a huge boost. But I wanted to see why that boost is happening. They actually put 3 asterisks here. And the reason is there was a tax benefit that Facebook collected. And with that tax benefit, it actually gave them about 31 cents higher of earnings per share. So in theory, this earnings per share was $2.40. That's still a growth compared to the $2.12 that they had a year ago. But again, sometimes it's good to look at these reports to see what's really happening, because one can say $2.71, that's a huge gain, but we can see it was mainly due to this one-time tax benefit. Now let me show you guys some of the things I'm very excited about Facebook. The first thing is they are doing Facebook gaming. So they partnered up with Microsoft in bringing the Mixer community over to Facebook to do Facebook gaming. Facebook gaming is the streaming platform, for example, Twitch or YouTube gaming. This is where gamers, and not only gamers, a lot of people just like to stream their platform and people watch. During this time, obviously, there are advertisement plays. And by doing this, I do believe it's bringing more people into their platform. For example, I follow a few streamers and I see a lot of them converting to that Facebook gaming platform. So it's showing like there is some movement. So that's good. Facebook is also entering the cloud gaming market. Not sure how heavy they are intended to go in it. They just released this on October 26th of 2020, and they have a few games out there. But again, this is actually another way that they're gonna get more people to join their Facebook applications, because a lot of these things, from their Oculus to now their Facebook gaming to their streaming service, you need to have a Facebook account to use it. So they're pushing and bringing these people over. Next, I wanted to show you that Facebook gaming and YouTube gaming for the past year have seen a nice uptrend going up, and that's great. It means that people are interested in these platforms. Unfortunately, these are nowhere near the level that Twitch are seeing, but hey, they are growing. Another thing I'm very excited about Facebook is they're making ways to monetize WhatsApp. The first thing is that you're doing shopping, payment, and customer service on WhatsApp. So now if you are a business, you can kind of have your catalogs on WhatsApp and then sell online through that platform. Obviously, if you sell through that platform, you sell some form of fee through Facebook. They are doing the same thing with Instagram right now. They're doing the same things with Facebook. Their partnerships with Shopify, for example, are just pretty great, that they are moving into this kind of e-commerce and making their application where people want to continue to work in there and continue to have eyes on their system. So those are pretty much the main things I'm super excited about Facebook. Next, let's take a look at their balance sheet. But before we take a look at their balance sheet, you guys should also check the link below for 7 Investing. Every month, they recommend 7 stocks for $17 a month. If you use my link or my promo code Jose, you get $10 off the first month. May I say, this is an affiliate program, but I use their service and would recommend it to anyone. And that's why I'm showing this here. So now let's take a look at their balance sheet. They have a very strong balance sheet. Their quick cash is pretty much the same levels it was about the beginning of the year. Right now, they're sitting at about $55 billion of quick cash, where at the beginning of the year, or about 9 months ago, they had at 54. So an increase of about $2 billion. One thing we're seeing is they are seeing a huge increase in total assets. They saw about $13 billion increase in total assets, mostly coming from property and equipment, and also that $2 billion of cash. If we take a look at total liabilities, it is down about $4 billion compared to the beginning of the year. They're now sitting at $28.7 billion compared to $32.3 billion about 9 months ago. So it's good that we're seeing an increase of total assets. We're also seeing an increase of cash, and we're seeing a decrease of total liabilities. Facebook is probably one of my favorite balance sheets because it has no long-term debt. With no long-term debt, this means plenty of things. They can be very aggressive when acquiring companies or making acquisitions. They can also be very leveraged. They are a money-making machine. So if they wanted to grab some long-term debt, it wouldn't be the worst thing, and use that for leverage abilities. Next, I wanted to take a look at their cash flow. Their cash flow is pretty strong. If we take a look at net cash flow provided by operating activities, it's about $9.8 billion. This is a money-making machine right now. If we take a look at the increase or decrease in cash and cash equivalents, it's actually down about $9.5 billion. And people might be like, oh man, that's crazy. They're down about almost $10 billion in cash. The only reason they're about down $10 billion in cash compared to a quarter ago is they used a lot of money to purchase marketable securities, which is just a short-term or long-term investment. And that was about $14 billion of investment. But like we mentioned, they have crazy amount of cash, which is really great for the company. Now let's take a look at their growth. Facebook is expected to grow 17.8% average annual growth for the next 2 to 5 years. Anything growing over 15%, I believe, is a super growth company. So this growing 17.8%, profitable already. This is the reason this is a tier 1 stock for me. Next, let's take a look at historical growth. For the past 4 years, historical growth for Facebook is over 25%. Obviously, it has been decreasing over time. This quarter, they saw 21.6%, and I do believe this year will be a lot slower revenue growth because the first 2 quarters were kind of bad due to COVID-19. People didn't want to advertise then. So I do believe this might be a bad year for Facebook in terms of that revenue growth. But if things get better, we will see better numbers next year. It's my expectation, right? Next, let's take a look at gross margins. Facebook has high gross margins. This past year was 81.9% of gross margins. It is decreasing a bit over time, but it's still above that 80%. Profit margins are over 20%. They seem to be around that level, sometimes even reaching as high as 40%. And I want to say that is also very, very impressive. If we take a look at cash flow, at their cash flow statement, their revenue is increasing, and same is their net cash flow from operations. That is great news. If we take a look at their operating cash flow margins, it's as high as 51.3%, and it's pretty flatlined there for like the past 7-8 years. So it tells me that this company is doing amazing with cash, and we saw it with that balance sheet. Free cash flow is about 30%. Again, really good. I honestly would have expected it to be lower as they are continuing to invest in technology. So it's still pretty strong that their free cash flow margins are that high. All right, so now let's take a look at my thoughts. But before, don't forget to check out the merch on the store right now for Self-Taught Investor. Hope you guys are enjoying it as much as I am. This is how I learned this game, through self-taught learning, month after month, day after day, just reading. So I thought this was the perfect type of merch to create. All right, next let's take a look at valuation. On the bottom, we have Facebook. Facebook's forward PE ratio is 27.59. Now with this 3% drop, I want to say it's probably closer to low 27s or high 26. And up top, we have Google. Google is 27.45, but after this nice 7% run-up that they have, it's closer to 29. 29, it's actually what Apple and Microsoft were before earnings. So that's, to me, telling me that that's what the market is valuing these companies right now. So that now I believe that Facebook might actually be a bit undervalued compared to the overall market. So unfortunately, I already bought my stocks for the week, and I buy every single week. I dollar cost average, and I put it on my Discord channel, so make sure to check that out. And I wish I would have checked this out earlier. I think I didn't because it was earnings, and I'm not big into that volatility of buying right before earnings. But now, if next week we are within this forward PE ratios, I'm most likely going to add on Facebook. Facebook is a tier one stock for me for many reasons. Very strong balance sheet, very strong revenue growth. We're seeing ways that they're trying to monetize WhatsApp and their other platforms, from Instagram to all the shop and e-commerce they're working with. The Facebook gaming I thought was the greatest move Facebook can do. Their Oculus platform. We're also seeing cloud gaming that they're entering. So I do believe Facebook is going in the right directions. They have very strong gross margins. They have very high profit margins as well. One of my major risks for Facebook obviously is the overall government and all these privacy items that they keep getting fined for, and that kind of movement right now is definitely a risk for Facebook. So right now for Facebook, if I did have the funds right now and I didn't purchase, I would have actually purchased Facebook for the week. Because of that, I have to wait for next week. But next week, if we have this type of forward PE ratio or anything lower than this, I honestly wouldn't mind buying more, increasing my overall position on Facebook. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. Make sure to let me know in the comments what you're doing. Take care, have a good night, and maybe see you for a third video, or I'll probably at least work for another video and pump one out tomorrow morning.